Welcome, everybody. We are coming to you on March 11th here today, and this is insider training. So if this is your first one, welcome. We do this every Wednesday at the same time, and we have darn near about 2 years of back insider training. We've never missed a week. So we have 2 years of trainings inside of school. So when you go to school and you click on insider training, you can go all the way back to 2024 when I first started kicking off this training stuff. Today, we're going to be talking about the point of sale finance close using the app. If you don't have the app on your phone, please reach out to your client success manager so we can set up your app, update your app, so you can use this at the point of sale. A few things about the app. There's a finance calculator in there, so you can structure the approximate cost of what the loan or what the job would cost. Of course, to find out the specific rate and term, you would just open up the lender or Improvify Advisor and then send the link or the QR code to the consumer so they can apply. But we use the app to structure an approximate cost for the consumer to get excited about saying yes. So they get excited about affordability. So if you don't have that, reach out to your client success manager and we'll get it set up for you. All right. So, sup. This is our new screen that I'm going to do. It's going to be called the sup screen. What's up? So here's what is up at Improvify. I like to give you all updates of what's happening on the backside of this dealio. My marketing team and technology team are feverishly building you, Improvify clients, a marketing toolbox where you can and will have PDFs, laminates, all accessible to you, banner ads, a consumer credit center HTML website that you can click and just drop into your code, or you can copy it. My goal is to give you all the assets so you can market and advertise financing. Here's the really neat thing about what we're doing that other lenders don't do. It's all about you, meaning it'll be Chris's Roofing Consumer Credit Center powered by Improvify. So it won't be Improvify Lending. It'll be Chris's Roofing Consumer Credit Center powered by Improvify, really tiny. And what we wanted to do is position you as the experts because it's all about you. It's never about us. It's about you and your consumer credit center. So, marketing toolbox. When we release this, trust me, you will know. You'll get calls from your CSMs. I'll be bragging about it here online. I'll be talking about it online on social medias and YouTubes and Instagrams and Facebooks. And if you're not following me there, you should, because all I ever do is train contractors on how to help more homeowners at the point of sale. All right. Reno Ready. I'm still working on this. I'm hiring a marketing person to actually roll this out for you. Reno Ready is a program that we want to connect you with the top realtors in your area so we can get to their buyers and sellers to help them with the home improvements that you do and then provide the lending from you to them. Reno Ready, working diligently to build that out for you. In this week's partnership highlight, we have teamed up with a company called The Good Contractor List. If you have not looked into The Good Contractor List, please do so. My very good friend, Randy Hurtado, is heading up that division for them. Just last week, a consumer chose the contractor specifically because they were on the Good Contractor List. It comes with this like $20,000 or $25,000 guarantee. It's like really ridiculously awesome. They only accept the top of the top. So the Good Contractor List, check them out. Really, really reputable, good people. We only partner with the best of the best. So if you are following me on social media, you'll see Contractor Dynamics and Improvify have partnered. we've got the best of the best partners out there. So in case you ever needed somebody, we've got really vetted good partners for marketing and advertising and the good contractor list and all sorts of stuff. Here's an example of what a good consumer credit center on your website should look like. Now, these are little photos. You probably can't see them, but that's okay because as you know, every week we upload this video and this presentation deck. So why am I showing you all this stuff? Because more and more contractors reach out to our team and say, I'm interested in building a consumer credit center on my website. What should it look like? What should it say? This is an example of what your consumer credit center should look like. Not one place on this do we talk about lenders. We don't name them. We don't speak to them. We talk about promotional financing like a 12-month, no interest. We talk about low monthly payment options, but we don't specifically state lenders at all. So if you are looking to build a consumer credit center on your website, please refer back to this PDF, send it to your web people and say, I kind of want it to look like this. All right. And if you have any questions on this and how to do it, reach out to us, myself or Valerie Glover. Reach out to your client success manager, your CSM, and ask for help. That's why you're here. We're here to support you so you can help more homeowners. There's no other lender that does this. There's no other platform that does all the stuff that we do to help you. All right, let's get into training. Objective of today. I want to help you increase your close rate. I want to help you sell bigger and better products, which leads to better and bigger ticket sizes. I want you to increase your application capture at the kitchen table, also known as take rate. I want to protect your profitability. I want to protect your margins. Those four things are super, super important. And that's why you hired us at Improvify. Help you close more, help you close higher, help you get more yeses, and help you be profitable so you stay in business. Your competitors that are not offering financing, that are not Improvify clients, are not doing it properly. And that's why we're here. Here's the missed opportunity. Most contractors that you compete against, because they're not here learning and then implementing, are losing in four specific areas. They may present the price before the payment. What does that mean? I talk about this all the time. If you shock them with a big ticket size, you stop them emotionally. If you present 12 months no interest, 18 months no interest promo, low monthly payment option, or hey, if you want to pay us cash, it's $25,000. The psychology is much better when presenting promo, the low monthly payment option, and then the ticket price. The ads that you see on the Super Bowl do the same thing, and they spend millions. They don't ever advertise F-150, $117,000. Nobody would go to the car lot. They advertise 1.99% for qualified buyers, or lease now for $449 a month, right? They don't put this Ford 2026, $117,000 freaking dollars. No one would go to the car lot. Ashley Furniture doesn't advertise the cost of their crappy furniture. They advertise the fact that they have 5 years no interest. You dig? This is the psychology, okay? Most contractors fail by using financing as the backup. They don't present it early, always, often in all that they do. They try to bring it up at the end to save the deal. Oh, $25,000 is a lot? Geez, sorry. Did I fail to mention that we've got some financing? Like, no. They leave the home without an application. What does that mean? It means that the sales rep didn't come here to get trained on how to take an app. They like an afterthought. Oh man, maybe I could have used financing. I should have had them take the app while I was there. Why? Well, because if you're there at the point of sale, you can handle obstacles and objections and questions. And that's why we train people like, hey, if you're ever sending somebody an application from the office or virtually, stay on the phone with them while they fill it out. Because why? If they have any questions or concerns, you're there to help them. It only takes like 5 minutes. It's a soft credit pull. The next thing in number 4 is offering discounts. Discounts. I've talked a lot about that this week on my social medias. I'm not a huge fan of people discounting because I think that there's some strong psychology that says, hey, if I discount this job 10%, my consumers will think that I could have maybe gave them 12% or 13 or 15. I'm not a big fan on discounts. I'm a big fan on deal making and negotiating and fair trade. How are we going to fix some of this stuff today? Well, number 1, you're here listening to it. So you've already got enough. Number 2 is you can use your mobile app, your desktop app, your iPad app from Improvify to help move this whole sales process down the road smoother. The finance calculator gives the customer the idea of affordability. Now look, I don't know what lenders you have. It don't matter to me. I want the customer to say yes to you. That's it. I don't know if it's a 9.9 10-year. I don't know if it's a 14.99 20-year. I don't know if it's a 6.90 30-year. I don't know if it's a 3 or a 5-year personal loan. I don't care. I care that they say yes to you. Offering financing is the lever or the lever, depending upon if you like potatoes or potatoes, to help them say yes to you. I don't care what the interest rate or the term is. I care that they get approved and they say yes to you. Do you dig? Like, financing isn't perfect. Who cares? Neither are your customers or you. We use this stuff to get them to say yes. It's affordable. I need it. I want it. I have to have it, but I didn't have 25 grand. The budget builder close is all about making the budget work for the consumer. And we use a structured assumptive close throughout. The pre-appointment call setup. I can't say this enough. Nancy, it's super cool. Somebody calls the office and says, hey, I need your services. It's expensive. I see that you have financing on your website. And you go, great. We can help you with that. Listen, when John comes out to meet you and your wife tonight at 6, be sure to ask John about our special spring payment promotion. All you're doing is the cookie crumbs offer. You're dropping the psychology into the head of the consumer that you got something to offer them tonight at 7. I don't know if they take the promo. I don't know if they take the long term, the short term, the midterm, secured, unsecured personal loan. I don't care. I want to make sure that the customer knows that we have affordable payment solutions so they can say yes to you. That's the beauty of this. Reframing financing at the kitchen table. Your core mindset shift. You're not necessarily selling financing, you're offering payment solutions. You're giving them access to flexible, affordable ways to buy the things that, trust me, they maybe didn't want to buy anyway. Now, I just moved to Alabama. Do you think after I did what I did, I wanted to spend all this money on painting and a fence? Painting, no. But yes, now that it's painted, it's beautiful, so I'm happy. The fence, I absolutely did. Why? Because I wanted to protect my little doggos. I didn't care what it costs for the fence because my dogs mean everything to me, and I cannot have them being eaten by an alligator. So my pain point for the fence guy is what? We're going to build you this fence. It doesn't matter what it costs. We're going to protect your dogs. Oh, by the way, we have a payment solution. We can do half of your yard for $100 a month, or we can do your full yard for 178. Which option works best for you, Mr. Scoville? Do you think my fence guy sold me like that? No. But my fence guy saw me talk about him on social media, and yesterday he said, "Dude, you called me out." I said, "Yes, I did." I said, "Because if you would have presented payment options to me, you would have had a $20,000 ticket instead of a $7,000 ticket." He goes, "Seriously?" I said, "Yes, because my yard is a half an acre. And we could have fenced the whole thing in for $242 a month. But instead, you only got $5,000 out of me." He was like, "What?" Dude, all you had to do was present a payment option. You didn't do it because you're not with Improvify. He uses Green Sky. Green Sky is a decent lender. They're good. Their dealer fees are high. But nobody at freaking Green Sky taught the fence guy how to sell financing. The guy lost a $17,000 upsell. He could have had the whole fence, the whole yard. But he only got a little sliver. He got 5 out of me. I am a customer of Improvify as well. I used Improvify's personal loan to finance the painting and the fence. I'm not just in the hair club for men. I'm not just the owner. Like, seriously, this is just crazy. I told the guy, he goes, "Man, why'd you call me out like that online?" I said, "Because you need to learn. Maybe you should become an Improvify client too." Anyway, how do you script it? How do you make it non-scripty, non-pitchy? Hey, look, most of our homeowners in Michigan, name the city, either pay cash or they use one of our payment solutions to help keep their liquidity in the bank. You can reframe this. Most of our customers like our 12-month no interest or our low monthly payment option, and they leave their money in their savings account. So you can take this sentence and slice it and dice it. Most of our customers don't want to use money out of their savings account. They love our 12 months no interest and our low monthly payment options. Which one sounds more interesting to you? We can look at both, and you can actually make a better buying decision by choosing. Does that sound good for you and your wife? Do you see? I'm scripting and I'm just kind of going with it here. I've been doing this a long time. I'm good at it. But you as a sales pro should be good at it too. Why? Because you don't want to make it sound, "Mr. or Mrs. Smith, are you looking for financing?" I'm not looking for financing. I don't even like the F word. Are you looking for affordable payment solutions? Because a lot of our clients love, we tie it into a lot of our clients love. Love is a great word. This and they love that. Which sounds more interesting to you? Interesting is a great word. Chuck Toki ate this up when I had a meeting with him last week. He's like, "Dude, did you just say the word interesting?" I'm like, "Yeah," because what a weird word to use at the point of sale. Which one of these interests you more? Man, I want to go out and sell something right now. Key training points. Introduce payments before presenting the price or with it. Give them options to say yes to you. Normalize it. Lots of our customers love using our financing solutions through our consumer credit center. There's no embarrassment to financing nowadays. Everybody's using it buy now, pay later on Amazon. So don't even think that you're hurting someone's feelings by asking if they need a little help. If you don't offer it, that's mean. That's rude. Protect your margins, please. Don't race to the bottom. It's never worth the win. Don't discount your prices. Give them affordability. Shift. We can't afford $20,000. Hey, Mr. Smith, I feel you, man. Neither can I. That's why a lot of our clients love using our payment solutions. You dig it's $20,000. Stuff costs a lot of money, but you know what? You don't have to pay 20. What do you mean you don't have to pay 20? We've got affordable financing solutions for you. We're cool. We got you, man. Using the Improvify app at the point of sale. Explain the flow. Hey, look, I got this really cool tool. And what we can do is show you approximately what it may cost. And then, we got a QR code, Mr. Smith, for you to scan. And from the safety from your device, You can apply and I'll answer any question that you have in the process. I'm not taking your social security. I'm not taking your application. I'm here as a contractor to help you make application in case you get jammed up. I got you. And if you get stuck, call the deal desk because we'll help you at Approvify. The calculator does a few powerful things. It can convert large numbers, 20,000, 25, 50,000, 100,000, into manageable payments. People buy cars with auto loans. People buy homes with mortgages. People buy furniture with promotional. Why should home improvements be any different? This gives you control of the budget conversation, by the way. Using the Approvify app at the point of sale. Hey, listen, based on what you told me, let's plug a few options and see what comfortable looks like. You're not asking for permission. You're guiding them through the process. Hey, listen, based on what you've told me with your budget, Mr. and Mrs. Smith, let's put a few options into my good, better, and best, or best, better, good calculator and see what comfortable looks like for you all. Have you ever used financing, Mr. and Mrs. Smith? No, I didn't even know that we could finance this thing. We thought that we were going to have to empty out our retirement 401k. My goodness, no. No. Keep your money working for you. Let's leverage the money from Wall Street. Let me show you what comfortable looks like. 10,000, 15,000, 20,000. Payment. Hey, which one works best for you? Oh, I love this stuff, man. Show them the good, better, and best pricing. Show them the years, the options. Who cares? I don't care if they take a 5-year, 7-year, 10-year, 12-year, 15-year, 20, 30-year option. I don't care. Let the homeowners decide what term that they want. Do you think I want a 30-year mortgage for this house? No. I needed a 30-year so I could afford it. Nobody wants a 20-year home improvement. Nobody wants a 30-year home improvement. We do it so we can buy the thing so we can afford the payment. You're following me here. It's never about wanting a loan. I want to have a loan and pay for it for 20 years. No, you don't. You'll take out a 20-year because it's affordable. You'll sell your house in 3 years and you'll pay off the loan with the proceeds because there's no prepayment penalty. That is how people buy. You should always mention no prepayment penalty. A lot of our customers just pay these loans off fast. A lot of our customers don't even live in their house past 3 years. What does that mean? That means that you can take out a 20-year term, keep the payment super low. When you sell your house to retire and move to Arizona, don't move to Arizona, it's dry. You can just pay off the loan. If you take out a 3-year, the payment might be unbelievably expensive. You might not be able to afford the payment, all right? Yeah, let's stretch it out to 10, 15, 20, 30 years. There's no prepayment penalty. Explain the calculator. You remove the guesswork, removes emotional math, show them the number, get them to apply. It's so simple. The budget builder close. This is where advanced Approvify contractors, Approvify certified pros really learn how to sell. You diagnose, just like a doctor, the payment comfort. Hey, Mr. Smith, when you borrow money, how do you usually borrow the money? What do you mean? Well, you got a beautiful F-350 out there. Did you finance that on 72 months or did you finance it on 12 months? Are you kidding me, man? I financed that thing on 72 months. The payment's $854 a month. Fantastic. Because home improvement financing works the same way. You can choose a longer term if you want a lower payment, or if you'd like to get the thing paid off in a year, you could do that. Or if you'd like to not have any interest at all, feel free to use one of our promos. You see what I did there? I normalized it and tied it to something that he had in his driveway. Hey, look, when you buy things, you usually choose payment options over a long period of time or short period of time? Long, man. Cool, me too. Hey, let's get your application into the dealio. Always tie your sale to something. Tie it to something, all right? Present 3 structured options: best, better, good. Good, better, best. Option 1, the lowest investment, the lowest monthly payment. That could be best. I'm sorry, that could be good. Apples to apples. $10,000 shingle job, $10,000 shingle job. The next could be a $15,000 longer warranty, maybe. And the premium solution could be the Mac Daddy super duper lifetime warranty rubber mail. I don't know, you dig, like the best. You can show them the payments from your payment calculator to help them make a better buying decision. Good, better, best, better, good. I like best, better, good. Let the customer decide which works best. The neatest thing is when you put the numbers in there and you actually do look at like 10, 15, 20. And if you do it on a 20-year term or a 10-year term or a 30-year term for the secured loan, you'll see the payments are so small, even between that $5,000 bump. The difference is because the term's long, they'll usually buy the best. The budget builder close, step number 3, the assumptive close. Hey, look at Mr. Smith, based on what you've discussed with me, which of these feels like it'd be the best fit for you and your wife? Which one feels like it could be the best fit for you and your wife? I don't care how you buy, just buy from us. That's that whole theory. Silence. Never talk over them at that point. Never apologize for the interest rate and the term. Why? Because it ain't your job to apologize what the lender gives them. If that customer has an 850, they deserve an 850 FICO and interest rate and term. If that customer has a 575, look, it's sad and it's challenged credit, obviously, but unfortunately, it is what it is. They have a higher rate, higher term. They already know it. Application capture waterfall strategy. The big rule, don't leave the house without taking an application. Why? Because it gives them something to do, to buy more in. If it's a soft credit pull, it doesn't hurt them. If it locks in their rate for today, it doesn't hurt them. If they say, hey, I need to think about it, at least we've locked in the rate and the term so they can think about something more than just thinking about something. We've given them one more step to say yes to us. Hey, listen, before I leave, I understand that you need to think about it. Let's see what you qualify for so we can lock in the best structured rate and term for you. The rate lock close, the no credit pull close. It's a soft credit pull. We're not going to pull your credit. So let's see what the promotions look like. Let's see what you get approved for. Don't just think about the application. Take the application. Application capture. If approved, high five them. Confirm the structure. Confirm the timeline. When you can install. Confirm the funding process. Walk them through the next steps. If declined, use the multi-lending waterfall. If you have to go down to buy deeper, go to buy deeper. If you do a personal loan, do a personal loan. If you have to do a secured loan, do a secured loan. If you have to call the deal desk, call the deal desk. At least it shows them that you're fighting to get them approved. Most of your competitors only work with one lender, and that is amateur level. You don't do that here. Handling objections with a calculator. Oh my gosh, that's too much. Well, is it the total investment or the monthly that feels heavy for you? Well, it's definitely the $25,000. Great. We got a consumer credit center. We have longer terms that will lower that monthly payment. We even have 12 months, no interest. Let's get you into the app and see what you're approved for. And let's get the payment within your budget. This is exactly how you handle obstacles and objections with your app. Adjust the term. Get them to apply. Let them decide which term fits their needs best. So, when you introduce financing early, use the calculator before or while presenting the price. Present good, better, best with payments or best, better, good with payments. Take the application every single time. Get them approved. Give them something else to say yes to. Your close rate will increase. Your average ticket will increase. Your confidence level will increase. The app is not just a tool. It is literally your closing weapon. It is what you should use every single time. Plus, it's pretty cool because it's so simple. And your customers will probably be like, wow, what is that thing you got there? Oh, this is our app. We got a consumer credit center. We're so different. We're not like any other lenders out there. All right. 1032, right on the money. I like to keep these things at 25, 30 minutes so I can get you all back to work. What questions does anybody have here? Quiet group today. Anybody? Anyone? No questions today. Wow. All right. Well, I will get this video loaded up. I will get the deck loaded up. If you think that this video could be helpful for one of your sales pros, please share it. Get them into school. Share the link. Send them the link. We're here to help. If you need anything, you need additional training, you need one-on-one training for your company, reach out to your client success manager, myself, or Vale, and we'll get you signed up. You good, Vale?
Yep, I was just going to congratulate Brent. He said he did the softball close yesterday in the chat section. It looks like he has another question. Also, when you say leave with an application, do you mean an online one?
Whatever it takes. Like, leave with an application means get them to apply to get them approved. So whether it's super prime, prime, subprime, near prime, secured, personal loan, get them in because anytime you can get them to commit to doing something, they're bought in with you. Plus, if you have the Consumer Credit Center, the chances of them going to somebody else and applying again are very low. So anytime you can ever get a customer to keep moving in a forward lead direction, much better for you. Awesome. Cool. All right.